Hello traders, the title of the video is how a CCI trader trades a specific CCI trading a signal. I'm on the quarterly chart of INSEE. Is that the correct pronunciation? Inside a corporation belonging to the healthcare sector. The epic is INCY, India November Charlie Yankee. And we want to talk about, is how a CCI trader trades a specific CCI trading signal. Now you have to understand that we do not have a CCI trading signal if there is no valid CCI trading setup. All right, so the setup will generate the signal. All right, so here we are. So what's happening here? Look at it. I have on my chart here the CCI period 14. Now for traders who are a little bit discouraged, that why are you not on the 4-hour time frame or the I will explain it to you. We are looking for high probability trading setup on a higher time frame, and then we break it down. We can break it down even to the 3-minute, 5-minute, 50-minute time frame. We can do that, okay? So looking at my CCI period 14, there is no confirmation you see here. CCI is forming lower lows and lower high. But because we are not trading a CCI, or we can say, we will say that, okay, there is no confirmation because both the price and the CCI are not converging. They are diverging. All right. So going on like this, you say, what's going on? Why the CCI is not confirming the price, and why the price is not confirming the CCI? But we cannot trade the CCI itself, or we can say something is not working. But then we have another information here, which is the Fibonacci, the 138.2% Fibonacci extension level. So the CCI gives us a warning that, well, what the price is doing doesn't make any sense. But we say, well, we acknowledge that, but we are not trading a CCI. And now we know also that there is a market stable data that states that if a financial instrument breaks above a prior high, which is this one here, the next challenge for the bullish momentum is the 138.2% Fibonacci extension level. So I use exactly 138.2 Fibonacci. I do not use 138.2. I use 138. That's it. So price at 138 exactly here. You can see the zone of $150. Now we see that some people try to sell it at this high here. They couldn't. Okay, but I mean, they sold it for a while, but quickly went back up, all right? Now here we are again, first candlestick bar, quite tall. As the price went up near the high, some people sold it at 138 Fibonacci extension level. No, here, 138.2, okay, call it 138.2% Fibonacci extension zone. Those are, we are on the quarterly chart, so if I drop it down to the monthly chart, right now traders are happy. You see here, all right, a doji, all right, inverted doji piercing through the 138.2% level. So you can see that this month price did open here, went up all the way to the 138.2%, only to be sold down, which means there are orders here to sell. Those orders are filled, and the price quickly came back down, close here. Following candlestick bar open, trader will highlight the high, the low, and the median line of that doji. They want a rally into the median line. And this is about practical trading. You highlight the high, the low of that doji, because they know that there are some selling activity here, and the median line. So they are watching the median line, which I'm going to color now into pink to please the beautiful ladies that are trading better than men. So the one that rally, so was good, isn't it? This month, April, there was a bit of rally. If I go to the daily chart, watch the pink line. All right. In fact, on the daily chart, where was I? Okay. See, right D below the peak line and retest a bit here. Not bad, not bad. And then after that, look, it gapped down. Now the reason why I'm laughing is because a lot of traders are doing exactly what I'm telling you all the time. Highlight the high, the low, and the median line of that doji. The median line, you see where they sold it. There was a bit of consolidation here, and it just sold it down. All right, you see, now you see what's happening in the market now, all right? All right? But let's go back again to the quarterly charts. We are talking about CCI diverging from the price. No confirmation, but we are talking about how a CCI trader trades a specific CCI trading signal. But we must first have a setup. So what is the setup here? There is a divergence, CCI going down. Now the price reaches a resistance level, very important resistance level, 138.2% Fibonacci extension level, or the prior move, from the move from here to here. We apply Fibonacci extension, if you want to know exact level, from the low of quarterly bar of June 2013. Okay. Now, I need to mention something very fast to trader. I used the closing price. I didn't put it at the top of the old candlestick bar because I mentioned this before. Not all Fibonacci traders use their Fibonacci extension the same way. When I apply it to the high, it doesn't make any sense because the 138.2% is quite up here. But then I say, all right, other traders may put it at the closing price. And as I did that, it makes more sense. Now understand why this candlestick bar got a bit of shadow here. And then as we went to the monthly chart, it became clear to us what is happening after we highlight the high and the low, the high, the low, the median line of that doji, inverted doji here. So people are selling. So the signal, because if we use the monthly chart as a trading setup, CCI diverging on the quarterly chart, now we start seeing bearish, candlestick bar on the monthly chart. If we want to trade this, we need to implement a top-down trading method. We go to the daily chart, combining the monthly chart with the daily chart. Okay, it's in a rising channel. But you can see that those who sold it here are smart traders. So what they have done, they highlight the high, the low, and the median line of that candlestick bar on the monthly chart last month. And as this month of April has started, they want a rally to retest it, which is another setup. So this signal is also a setup, but a setup on a signal time frame. So we see the bigger setup, which is on the quarterly chart, all right? Don't get confused. CCI going down, displaying lower lows, lower high, all right? Now the price is also a 138.2% Fibonacci extension level, another setup. Price break above the previous high. The next challenge is 138.2% Fibonacci extension level. Now we switch our attention to the price. We notice that on the monthly chart, there is an inverted doji piercing through the 138.2%. So we have candlestick pattern being formed, piercing to a key level. We talked about this before. CCI diverging, all right. Price at 138.2% Fibonacci extension level. How do we trade it? How CCI traders will trade it? They will highlight the high, the low, and the median line of that doji on the monthly chart. They will switch to the daily chart, waiting for a rally. This is the rally they look for. Pew, tack. After that, you see those two candlestick bars that touch that pink line. Okay, they touch the pink line. Those two candlestick bars close. Now from there, let's put a line there, talking about different time frame trading method. It's a bit messy though. I'm going to clarify it more now in a moment. After those two candlestick bars, so we are here, vertical line. Then from there, we'll switch to the entry time frame. So monthly chart, trading setup, daily chart for the signal. Now we use the hourly time frame. So we are here for the entry. So on the hourly time frame, it's a bit messy, but you need to understand what is taking place. What is taking place here, we want it to break below the peak line and to retest. That's all we care about here. Now here it is, your entries here. Break below the peak line. Now you see how this hourly here went down very fast. So it's after that one is closed on the edge, a little bit below that common center line. That's your entry. That's your entry there. Then you place your stop loss few pips above it. That's your entry there on the hourly time frame. And you can see that the reason why this session went down very fast is because most professional traders showed it there. They enter here. So price went down very fast. All the field down. And this is very nice because it displays another lower high. Those who miss the entry there will enter here. Are you getting it now? But you may say, Joe, what I got to do with CCI? The whole thing is from the warning that CCI was giving us on the monthly chart. So we acknowledge it. That all right, CCI display lower low, lower high, what the price is now at a critical resistance level, the 138.2%. We even see when the CCI was displaying lower low, lower high, we have a bullish breakout. That's a very funny divergence, okay? Okay, so quite a bearish divergence. But we don't want to sell because of the bearish divergence, the CCI bearish divergence, is just a warning. Now, as we try to investigate, all right, the allegation and the truth. The allegation is not the truth. All right, so we want to find out whether the allegation is true. The allegation again is talk that it is going to go down is true or not. Now we find out that it happened to be true, and so we implement, okay, so to speak, all right, implement a different time frame trading method. So you can see that. So here, people, so those are multiple entry. People saw it here again, and now they saw it again here, where near the media line of that monthly chart. So CCI are giving us blow the whistle, so to speak. Price now at a very challenging point. Next challenge is that if this warning is truly true. All right, this warning given by the CCI, this been lower lows, lower high, as the price going up. So the price will not go above that resistance level, 138.2% level. But we will not just sell because of that. We now implement different time frame trading method to trade it. Now, attention to the price. You see, this is nice setup because here, inverted doji piercing through, that 138.2% Fibonacci extension level. Good. Highlight the high, the low, and the median line. Now we go to the signal time frame, looking for the signal. But the signal, in fact, now we have a signal from the CCI, though we are using the CCI and the price, not the CCI by itself. So when I'm talking about CCI trading signal, we are talking about warning plus confirmation by the price itself, the number one indicator. So the CCI signal is known by the CCI itself, is altogether price, action, different time frame trading method, and a CCI. This is about how a CCI trader trade a specific CCI trading signal. The signal in this case has occurred, all right, when on the daily chart we see that the price break below the median line of that monthly candlestick bar, retest, and found a resistance, common centralized kaput. People look for weaknesses to sell. Now we will go to the hourly time frame. The reason why one should use another time frame after the signal is fired to use another time frame is to control the risk. You see, the point of a different time frame trading method is just to control the risk. Is it ready? Is it the best time to buy? Okay, we don't want to buy and then see it go up fast and then we are taking out before. So we are changing time frame to get it right. So we push it down. All right. We let it go at the right time, all right? So we don't risk too much pips or we don't risk too much money. So that's the whole point of using different time frames. So now you understand why I go on and on and on and on all the time in every video talking about different time frames. Because we can't talk about technical analysis, okay, as trading like a pro without banking on it, no stop, okay, different time frame trading method, all right? You may watch a lot of video in the past, there was no discussion about this at all, it was just blah, 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 and I wonder why people are so reluctant to talk about a different time frame trading method. That's the key for technical analysis. Otherwise, one is just going round and round. Do you remember the last time when you enter a trade, price take you out many times before you get it right? You don't want that. By using a different time frame trading method plus the CCI signal, all right, you are now in control of it. So if the signal fell, just close the trade and come back another day, all right? So to summarize this video, we look for CCI trading setup, then we use a different time frame until we see a clear cut, a signal to enter the trade. If there is no signal, we cannot sell. So the setup is, okay, the beginning, this is the foundation of the trade, all right? CCI, divergence. CCI, no confirming the price. Something is not working. Now, there are other tools that we have used here, Fibonacci extension. We know something else. And another, so we say, all right, if what the CCI is telling us is true, the price will have difficulties. So now we see that it's going on. We say, oh, what's going on? Everything looks okay. The price is going up. This being high, lows, high. Well, CCI, what's the problem? So we say, all right, if it's true, the next challenge now is here. Prove to us that your information is true or not. Here we see a doji. We say, all right, implement a different time frame to the middle. And then from there, we control it. Does it mean that the price will go down all the time? Now it starts going down. Now we control it. If you are already in a trade, again, now that you are in a trade, you need to pay attention to the signal time frame, see what's going on. All right? Another thing I forgot to mention is that though you see that this, you may say, oh, Joe, the reason why you see price gaps down, the people were selling here, this is a distribution. And yet again, you can see that if you accept, if you agree, there is a kind of triangle here. You see, it's a triangle. You see the pink line at the top, the blue line here, this trend line, and it's like a small triangle. So price going blah, 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 blah in a triangle. But because you are giving priority to sell signal in this zone, you are waiting to sell. A triangle is a consolidation. You will be positioning yourself here to sell in a triangle. You ignore the buy at the lower part of the triangle because you have noticed a weakness on the quarterly chart. Now you are looking for an opportunity to sell. So here we are. So you will be positioning yourself. So at the top, priority to bearish signal. At the low, you ignore it because of the warning on the quarterly chart. But what has happened here, as people sold it here, many people sold it and stock finally just went down. Boom. Down. But so as a day trader, so you say, John, quarterly chart, forget it. I'm not going to the quarterly chart. I don't need the quarterly chart. So, but the whole talking about the source of this trade, all right? The whole thing started from the quarterly chart. Do you remember? But probably, maybe you didn't care about the quarter. You see on the on the monthly chart that inverted, okay, doji at least, and then you see a triangle. You remember triangle? Anything is possible. So you see that this, you know that, okay, price going down first, the dominant force is bearish. Okay. At the resistance level, 138.2% level, now we see a small triangle here. I will be positioning myself here using a top-down trading method to trade it. So if you do not want to use the quarter chart, now you want to use the daily chart as your trading setup. So you say daily chart, setup, hourly time frame signal, 10-minute time frame for the entry. Okay, if you have any question or suggestion, put in the comment section. In due course, I will be recording another video to answer your specific question. If you think that, Joe, this is another blah, 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 okay, please let us know by giving us the thumbs down, all right? If you think that you find this video useful, you enjoy it, all right, give us the thumbs up. If you think that this is amazing video, an essential tutorial, feel free to share it on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how a CCI trader trades a specific CCI trading signal. speak to you soon.